Hi traders, welcome to video 6 of the binaryoptions.net trading video series. We're continuing our look at chart patterns. Today we're looking at flags and pennants. Quick review of chart patterns: visual patterns that occur frequently in financial markets. They can be continuation or reversal patterns and often appear as consolidations during a trend. Flags and pennants, they occur as consolidations during a trend and are also typically considered continuation patterns, meaning the trend that was in effect before the pattern occurs is likely to continue after, but not always, which is why we will actually wait for a breakout, which we'll get to shortly. And there are multiple patterns that we look for, and each one will be covered in a separate video. Flags and pennants, both are fairly common. Flags much more so. You'll see flags very often. Flags are basically parallel tight ranges that occur after a very sharp move. So if we see a very sharp move higher, a flag would be a sideways move. It can move slightly against the trend or even slightly with the trend, but basically it can fit between parallel lines. It looks very similar to a flag, with the sharp move being the flagpole and the sideways movement moving between two parallel lines is the actual flag formation. A pennant, same thing, except that the tight range is narrowing, so you have almost like a mini triangle, and triangles were covered in the last video. So pennants are just a mini triangle. Flags you'll see much more often. When the price breaks to the upside, both flags and pennants are traded in the same way. When the price breaks to the upside, we're looking to buy. Place a stop just below the pattern, and target is the low point of the pattern plus the length of the sharp move. That will become much more clear when we look at a couple examples. When the price breaks to the downside, we're going to sell short or get out of longs. Place a stop above the pattern. Target is the high point of the pattern minus the length of the sharp move. Again, that'll become clear in a moment when we look at some examples. As always, check out binaryoption.net for trading articles, tutorials, trading resources, and charts, which are what I'm using. I'm using freestockcharts.com, so you can get links and charting applications there. Let's look at a few examples of pennants. Zoom in on this here. So we can see Euro USD, we're looking at a 1 minute chart, sharp move down, small little consolidation, and then another sharp move lower. The reason I haven't marked this one off is typically we need to see at least 4 bars to 10 bars of action before we'd even be able to spot it in real time. If you were trading this in real time, there's almost no time to react to this. There's no real pattern here because there's only 2 bars basically before it breaks out again. Whereas this one, we can see there's much more time to see the slowdown and then actually formulate a strategy and get a trade, get our entries out there, determine what our stop's going to be on our profit target. So this, we have move down, move down. We're looking to enter short on a breakout of this pattern, so I've set the low here. Once it breaks below it, there's our entry point. Our stop is placed at the top of the pattern or just above it, so you can see I've marked this line as red, marking our stop. Now the profit target, we are looking at the length of the prior move. This is, remember, this is like our flag of the pennant, or sorry, the flag pole, and then this is the flag. So if you're looking, it looks like an upside down flag, and then we're looking for that to continue to the downside. It doesn't always. It could have broke to the upside, but typically these are continuation patterns. So I've just used a drawing tool to mark how long this prior wave is, and then we are going to set it at the top of the pattern and extend it down. So basically we're looking for the length of this move to continue from this point here, and we have the profit target right here. So let's just do that again one more time. Oh, and actually, so to there, so the full length of this move from here to the bottom of the flag, and then we minus that from the top of the flag. And there, that would have actually been our target there. And I like to just use the tools instead of actually calculating this out and, you know, what's the high of this minus the low of this and then subtracting. I find it easier just to do this, place it there, and then you can just see where those lines are. So you can put your profit target at the respective level, your stop at the respective level, and it's a little bit quicker when you're actually doing it in real time. You don't always have time to calculate the math of where each move went, so I find that easier. Let's look at another example, this one to the upside. Very sharp move in the Euro USD here. Strong up move followed by a sideways consolidation. It's at least a few bars. We can actually see this in real time. Looking for a breakout to the upside. We get it. I've marked it green to mark our entry. Our stop here is in the red just below this consolidation. And our target is up here. Let's look at how we got that. Marking the most recent wave higher. This time we go from the bottom of the pattern and extend it up. And let's just change the color of this one for our exit. Alright, so we can see the length of this move and looking to get out once that same magnitude of this, we're assuming same magnitude to the upside, right? They won't always be as clear cut. These ones are fairly easy to see. I'm going to show you one other one just to give you a bit of a different context for how these might occur. Netflix, let's just look at the long term. This is a daily chart now. The Euro USD was a 1 minute chart, so day trading, this would be more of a swing trade. So very long-term uptrend. And then we have this like massive gap up, another strong move, then a consolidation. Once again, this is a continuation pattern. Our expectation is that this will pop higher, but it is possible that it could have gone lower as well. That's why we wait for the breakout. So here I've marked this consolidation. Once again, here is the flag pattern. As you can see, flagpole looks like a flag. Let's just get rid of these for now. So I'm only going from here. This is a swing trade. If I did this, this could take a very long time for the price to reach the target. Whereas if I go here, I'm still getting a good trade and I'm in and out in a few days and I can start looking for other opportunities. So here's the length of the flag, the most recent wave. We add that to the bottom of the pattern. Go from the bottom of the pattern there and we just would have hit our target. Oops. Right about there. So we can see that one would have worked out well as well. But this offers a slightly different context. A lot of guys would miss this one just because of the big gap. But this still, if we kind of zero in, that too is a big price move. So we're just looking for that flag setup, which is anytime we have a sharp move followed by a sideways pattern. Please note these can sometimes be angled down. That's fine. Sometimes even more so, like that. They can also sometimes be even slightly angled up. That you'll also see. The only difference between a flag and a pennant is that the pennant is in a slightly narrowing range. So the bars start out a little bit thicker and then you have tiny little bars toward the end. So that's the only difference. As I mentioned, you'll see them less often. I find flags much more common, but that is what a pennant would look like. No real difference in how you trade them at all. Simply the one has a narrowing range where flags are parallel. So hopefully that helps you out in trading flags and pennants. These are one of my favorite patterns to trade. Risk is pretty low and the profit targets are generally exceed the risk. If you're trading binary options or some other option, of course, instead of a stop or profit target, you would be more looking at the amount of time to choose for your expiry. Typically, once these break out, they'll go pretty quickly, so you only need to choose an expiry with several bars. Just allow it enough time to clear the flag or pennant and start moving on its way. So once this breaks out, in this case, you'd be looking at maybe a couple day expiry. If you were looking at these 1 minute charts, let's just flip back to those. Oh, you're looking at the Euro USD. So in both of these cases, once it breaks out, it typically does move in the direction. So 1 or 2 bars expiry would have been fine there. Let's look at this one. Once again, once it breaks out, generally pretty consistent in moving, so we'd be again looking at 1 or 2 bars. In this case, you know, a few minutes out for our expiry of trading binary options. And hopefully that helps you out with choosing expiries, as well as if you're trading traditional markets, stops, targets, entries, all that stuff. In the next video, we're going to look at head and shoulders pattern. Until then, happy trading.